Take a look at our daily and weekly charts, bullish and bearish breaks. I don't think we'll find any bullish breaks today. There may be one or two. And see what these markets look like. Mainly the stock list will consist of almost every stock. Don't forget to subscribe to our channel while you're here. Follow us on Twitter at Daytrader Setups and on Stock Twits as well at Daytrader Setups. And you'll see this red subscribe button 9 minutes from the end of the video. From that point on is a tutorial that explains the recap grids and some about our chart. So when we show a chart, you'll understand what we're talking about. Other than that, if you understand it all, you don't need to watch the last 9 minutes. Well, the charts seem to be in command. Without any fuel being added to the fire, we were already in a not good situation here below the 50-day again. This lower trend line I talked about closing here the day before, or 2 days before, above, that we needed to get back above that. Yesterday we opened pretty much on that trend line, closed a little bit below it, and then today we gapped into the trend line, tested it, failed it, and we were headed down without any fuel being added to the fire anyway. This is my intermediate futures chart, and this was where we ended up at the end of the day on the 23rd. We have crossed into our short trigger area, 2668. We've turned green to red, indicating a downtrend, and we bounced right into where we're supposed to bounce into and failed. So this was the easiest chart in the world to read. If you're on our charting system, there's your setup. There's your predicted retracement. A failure could have went right through it and turned it back green. It didn't. And we predict that it doesn't when we've got a rise and a fall. We're trend shift pivot zone is what this is called. A pivot is a change of direction. We set the alert off. We went back this morning at the open, revisited here, and failed. We were already failing, and then fuel got added to the fire with the comments from the CEO at Caterpillar, and Katie barred the door. This is, of course, where we are now. I don't expect much of a bounce if it continues up, and right now it is kind of grinding up a little higher to 2638 area. I think it's going to intersect here. What it's supposed to do is reject and sell off some more. This is my bigger trend. This was an early shot of this morning. Day before yesterday we were pulling back to this area, and early this morning it was breaking down through here, and this was my shorter trend, not the one you were looking at a minute ago, that does the lot shorter reactions, as it had already broke down here. The one little rise we tried to get out of the futures there, rolled back over about 11:45, and that's about, I think, when those comments were came out from Caterpillar, and we started down and then just capitulated. The advanced decline lines, I love to watch these to kind of see what the market's doing. I run them on 3 different time frames. Now this time frame is the same as this one. I want to get the SPY in here on the bigger deal, and you can see it's struggling, trying to hold, and goes red zone and never can really get back through. And this is what you're seeing at that time. This is where you are about 12 o'clock right in here, and this is where you are on the bigger time frame on advanced decline lines. Broke down, chart works exactly the same. Broke down through, turned green to red, go back and revisit, and this was just before 12 o'clock. Go back and revisit, we fell right there. Probably that synced right in with the last little bounce on the ES there. This is where your smaller time frame ES turned back over a little after 11:45, so those just came right in together there, right in this spot. This is not that hard to do if you have a system and a plan to watch your system and then you just got to concentrate on some stocks. You can't be looking at 50, 60 different stocks. You'll miss them all. You got to just zone in and try to trade what you're zoned in on and keep your emotions out of the picture. That's one thing about the trading package. It keeps your emotions out of the picture. If you'll look at all the time frames you got running together, they're pretty easy to figure out. So after the market started selling, this is where we ended up. Remember this trend line that I drew across the tops of these candles? I said, I'm going to leave it here. It's going to come into play. We did penetrate it. We did close above it. Here's the 200 day. I'd mentioned way back here that we could still revisit the 200 day. This gave a little hope on this one day up here, and this day here when we took out the 50 pretty much. I thought was a big deal. I didn't hear a lot of other people making like it was a big deal, but it was a big enough deal. Didn't have any confidence in the market to get it going back up. We're right here, and it's pretty bad today. Good thing was that it didn't sell off any harder into the close. Here's the 200 day. We're almost definitely going to touch that in the next day or two. We really need to hold here. This trend line that you see drawn on this chart was drawn on a weekly, and it was drawn from way back here across the first drop we had, and that's where we're at now. This lower one was actually drawn on the lowest low we've made in the market so far. These will not line up exactly on the daily chart as we see them here, but when they alert during the day they will be precise. But you can see we're headed just below the 200 here, and then this is you see how it's not drawn precisely on the candle, but it is drawn precisely on that weekly chart. So based on where this is coming in here, we're headed back down into this area, which just happens to line up with my lower pivot. That has nothing to do with the other charts you look at. This is a Fibonacci related, the blue line, red line, green line, and this yellow line. That's included in our charting package as well. This is the daily bears breakdown that went into the bear zones. Apple, of course, fell the 200 again today after it tested it multiple times. That was a good day trading tool. Facebook was a good day trading tool. Of course, Caterpillar was an unbelievable day trading tool. On CAT, I want to share just a little day trading tip here. I'm going to put this on a 5-minute chart. This original this morning, early bounce right here. This was an old high on CAT, 157.12. Gapped up this morning, and of course did all the craziness they do early in the morning, and when it finally sold off, it came right back here. The low of the candle was 157.19. It got within 5 cents of this old high. Old resistance, new support. So you ended up coming in here, getting the bounce, and gave this really nice run back near the high day. That's how you do day trading. When it drifted back down, you don't have to be short here, and it went back and retested the VWAP. Tried it here and couldn't stay above it. Drifted on down, retested. You could short right here at the VWAP. Use the VWAP for your stop. That keeps you in the trade. And then when you get back down here to this 157.12, it failed it. It went down to the next recent high, got real close to that, and went back and retested the 157.12. Made a high there on that 5-minute candle at 157.22. It closed at 157.12. The next candle opened at 157.13 and went straight down. That's your support line. That's how you determine if you want to be long or short the stock. And if you'd have timed that well, look what you'd have got. If you'd have had the moxie to stay with the trade. Go down, slam it down, come back up. I was short right here. I stopped out right here on the 22 cent to the penny. I had to get back in down here after it jerked around and find me another spot to get in it at. I was already short on this trade, and once I got down below the 157.17, I'm like, okay, I was actually 157.12. I was like, okay, I hope that I can stay below that. So I had my stop at 22 cents, and it literally hit my stop to the penny and stopped me out of the trade, and then headed straight back down and moved about $3 really fast. I didn't try to get in that on a 1 minute chart. It was doing a lot of moving around right in here because it was a key level. And we finally settled on down on some of these reversals. I used our other charting system and picked me another spot and got back in, was able to get a couple of more good trades. I got in and out about 3 times during this part here, trying to protect profits, especially when it got down in here. I thought it might bounce, and so I came out, and it did bounce. Of course, each one of these wicks is a bounce, and so I ended up trading about 3 times through this area. I didn't fool with it much anymore, except for right in here when it capitulated into this spot right here. I caught some of this, maybe only about 80 cents, and then I never messed with it again after that. This was actually a trend line I drew on it on a 1 minute chart that I used as my guide to get out on the stop. But here's your list of stocks on the bear breaks. Here's your daily bulls. There were a few that actually had good days and that were up for various reasons and had really nice days. And this is Whirlpool intraday. You can see it did sell off toward the end of the day. I'm sure some of that was profit taking. Some of it was probably fear of the market and so forth. A lot of these I'm sure probably pulled back from their highs, but they still had good days, and they're in the bull zone, and you'll have to see what they do. This is your weekly bull break. You've got only 3 stocks on it, and this is your weekly bear break on the weekly charts. Remember, we're looking for consolidation breaks, and you may find some that's been consolidating. Many stocks had huge down days. It's hard to pick stocks right now. I think the market is, from what I showed you on the futures, is probably going to bounce some, and I would be, as far as day trading, I'd probably be taking the bounces and looking for shorts, and that's where I'll apply our charting system. And every time I revisit my trend shift pivot zone, I'll be looking to re-short off those lines, not to go long. And we'll see how this cycles out. I'm actually not going to be trading Thursday and Friday, which might be a good thing. Whatever you use to trade, just have your system, whatever you're trading, and stick to your plan. Don't let your emotions interfere with whatever you're doing. That's why I like our charting system. It's plain, to the point. Here's the line. Here's where it's supposed to reject at. Here's where it's supposed to go up at, and here's the value that it's going to trigger the trend shift on. We'll look at those recaps and see where they're at. This video is being brought to you by STS Pivot System Charting Package for day traders, swing traders, and option traders. Easy to follow charts and scanners, trigger prices right on the charts, on the setups. We teach 2 trades long and 2 trades short. That's all. It's that simple. Just like you see on this chart, the trigger price for this trade was in the corner over here from this point on, with this price posted, not to take it up here, and it did not trigger, but it wasn't posted as a trigger anyway. Came back. This is a classic, beautiful setup. Breaks right here. 167.26 was our trigger price. And we develop these same lines where you can overlay them on your shorter term charts. This is a 2 minute. By not taking that trade early when it went up here to 167.11, you avoided this 30 something minute pause here. It's not quite 30, about 15 minutes. This was a 60 something cent pullback by waiting on our trigger price to get in the trade here. And we were predicting that trigger price. This didn't go green until this happened. you have that up arrow where we're showing the price to go long at, and as soon as it triggers, it immediately gives a go short because it's so close to flipping back over. So that's exactly where it occurred, was right here. And that is how simple that package is to use. Trigger prices right on your charts. Got a 7-day free trial offer, 10-day money back guarantee. Once you get this set up, it's $69 a month. And we're extending as a courtesy, if you take this package, full access to the website, including the trade room if you want to come in and out of there as well. It's not part of the charting package, but it's an offer we're letting you come in if you want to. And I mentioned this in a video about a week ago that we were going to do this. Any previous member to Day Trader Setups from day one ever paid $1 to us, this $69 fee is waived. You can come in and try the 7-day trial, no outlay of cash whatsoever. If you decide you want to go with this package, then you can sign up. We'll look at the bulls first because it's going to be the shorter list. These were the few from yesterday. ESRX didn't actually sell off in this. That's pretty strong stock. It's holding its own, little doji day. And that's really strong when a stock can hold there. I think another stock that had a green day today, I don't know where it is on this list, is General Electric. It just kind of held its own there, still inside of this gap up, had a green day. But ESRX is in this bull zone. This is momentum. It's not consolidation break, but it's still in the momentum. And this stock was red, doesn't still have the check box. It's silver. It hit resistance up here today. A couple of more over here. Barely stayed green. Little doji day. That could be a reversal. That's your bulls and the bears having a fight there. Hit the 200 on this one. I don't think there's much. A few more down there. Got one more down here. Mostly some financials that tried to hold their own, and whether they continue to hold, I don't know. This is the rest of the list. ESRX was on there multiple times, so here it's listed again. I don't think you're going to find a whole lot more down here with a green day. By a nickel, by a penny. And then you still got these 2 or 3 that are hanging in here. Still got the check marks, even though they might have had a red day. Whether they can hold up under the market, I have no idea. That ESRX is pretty strong. This stock here looks pretty strong. It is at resistance. Take a look at the bears. Of course, we already looked at the huge list. This was yesterday's bears. They're already in the bear zone. Some of them didn't really go down that much further today. Some odd stocks in there. The ones from the day before. This is 3 days ago. Some of them had there's not a lot. It's a real mixed bag here. You got green, you got red, you got some in the bear zone, not holding momentum. Another big down day there on lows. This is a recalculated bear zone too. It was probably up here when it broke down 3 days ago. So a lot of these may be lower than they were. This is the original bear zone break, and this is where they are in reference to that point from 3 days ago. So that'll kind of give you a guide. Some of them have bounced some that are holding up. So a lot of stocks just sold off in different manners and different magnitudes today. And we'll see tomorrow. The bigger high flyers are going to sell off the hardest. But I don't expect an initial bounce tomorrow for certain. You never know what's going to happen. They may decide a point they want to step in, but I'm not booking anything on that. You definitely need to let this market, before you start taking longer term positions, settle in and spend several days settling. These stocks, 4th day on the list, 5th day on the list. That's all we got. Good luck with your trading. Be careful. Come over and check out our active trader setup charting package, and start watching some of our videos that are out there on training how to read those charts. They're not just get in and it's not going to go against you, but they are definitely tell you where the short watch or long watch starts at, and you can day trade them, you can swing trade them. Put a lot out on Twitter. You'll see things out there that's run for 7, 8, 10, 12 days off of one alert. So they're great for swing trading and option trading. You can get on the lower factor system and pick up some entries into some of these big moving stocks. Thanks for watching. Subscribe to our channel while you're here, and we'll see you later on in the week. Be sure to subscribe to our channel while you're here, and follow us on Twitter, and follow us on StockTwitch, and go over to daytradersetups.com, click on Ninja 8 charting, and you can learn more about our STS pivot system charting package. Thanks for watching. This is a tutorial on our recap sheet. What you will see here is this column here is the weekly list. It's at the beginning on the weekly bear and bull breaks, the daily bull breaks and bears, depending on which one we're looking at, and then you will have 5 days following. First day, second, third, fourth, fifth. So what's here today will be here tomorrow. We'll shift over to here, then to here, then to here. So you got 5 days you can go back and look. The price here, you got the bull zone trigger price, 36.80. This is the price of the profit since this alert. This is the net change on the stock for today. So tomorrow, when this shifts over here, this number will be the same where we triggered it at. That number will stay in here for 4 days. The profit will be shown based on the current price of the stock in the day compared to this price on the alert. Like for instance on this stock, $3.48 profit from this break based on this close price, up 92 cents today. This number is the profit at the high since we alerted it. It's the most profitable it's been. It got up to $4.27 profit. Pull back, closed at $3.48. As you go on over, like this stock here, SMTC, this was the break. This is the profit so far since the first day, $5.61 4 days later, and at the peak it was $6.31 profit. That's what these columns mean. The next part you'll find is this yellow line. It represents what I'm going to show you over here in just a moment, momentum. It can be on a bull or bear chart. And then trend stability, if it's green, it represents on the bulls, and the bears will show a red line for trend stability. The last part you'll want to know about, there's these check marks. They represent the bull zone as it progresses higher. Could be the same as yesterday. Down here, this could be the bull zone that's gotten higher and higher and higher as this stock went along, and it means it's still maintaining the bull zone levels. Even the new ones, it's staying above them. This is what the bear grid looks like. Looks the very same. Got the weekly, 1 day, 2 day, 3 day, 4 day, 5 day. So you got a chance to see the stability of the trade. You know if it was up or down today after winning a bear zone the day before. The stability, the momentum, and the bear zone level with the check mark. In the video, we will take this page and we will slide these up and down so you have a chance to pause the video and see every single stock that's in the list. Then we'll move it up where you can see these items, and you can pause the video, and then you can see every single symbol in the list. You can go to your charts and look up what's going on. So that's what's in each one of these grids. The current day, day before, day before, day before, day before. So going back 4 days, you got your weekly there. And all this is right here is something I prepare for myself. I take this day, and this day, combine them into this watch list every day, and that's what I carry forward over to my scanners. And just a quick part about what we mean by these levels changing. This is the bull zone level that the check mark represents the stock staying above, but the bull zone level when this stock broke out was way down here. This was the first breakout, and then as it recalculated our bull zone, that's what the green check mark means, is it's maintaining momentum. The yellow line represents this line that is our minimum momentum indicator used on down or up trades, and then our bull zone levels where it first broke out. And that's all these mean. Trend stability, this is the line we use here, and we come in and we call it trend stability, and that's what this represents here. This line is solid green rather than dotted. It's something we look at on the lows of the day, not being low enough for us not to qualify it for trend stability. So that's all these columns mean. So you'll be able to refer to the strength of the stock that is maintaining high enough lows to stay trend stable, what the profit is if you're staying above the bull zone. That's how you'll use this, and that's your tutorial on the grids. This is a mini tutorial on what the lines mean on my charts if you're a first-time viewer or been a while since you viewed. We're scanning on weekly and daily charts for my condition. When this green line is up, it's my bull zone, and when the red line is up, it's my bear zone. You need to be aware of support and resistance lines and what charts do at levels, and that's what these levels are for. Just quickly as I can do this, and we're going to put a video on YouTube getting more from your swing trading charts that'll be more detailed and look at more stocks, how they react to these lines. But the gist of what you see here is this is what I'm scanning for, and as you can see here, this showed up in the bear zone. It did go down for a few days, but these green lines are support, and that's why it fought for a few days, tried to bounce back up, headed back down again, came right back into the bull zone, a bear zone, excuse me, and continued on down. Now the lines, here's what they represent. A green line is a place that a stock went up to and rejected. So as this green line redrew itself every time we made highs right here, and then it stayed across here for reference points, continues the same line here for reference points. Resistance, when you get above it, becomes support. This green line was drawn way back in the history, and when this stock broke above this resistance level, when it came back down, it held it, it held it, it held it, it tested it and held it again and again. That was support. That's why I want you to be aware of what these lines mean. You'll see them on my charts. And then the activity that stocks do, sometimes they go, that's my first target, that's my second target. Many times stocks go target 1, pull back a little, target 2, then they may pull all the way back to 1 and go again if they're continuing an uptrend. In this case, it did the pull back. This blue line is a 50 period moving average, this orange line is a 200. So that's what I want you to be aware of as well. And then I have a pivot system that consists of this blue line at the top, yellow line at the bottom, and my target 1 and target 2. You'll see this particular day this stock gapped down, huge gap down, open way down here. The low on this stock was 169.68. I'm getting that right out of this box over here, and the value of that yellow line was 169.67. Within 1 cent it held that line and bounced that day for a huge bounce. It's not a support level, but it's where I look for stocks to try to hold. It's where I look, if I'm short, say from here, this is where I'm looking to get out. I'm looking to move 2 levels, target 1, target 2, going up, target 1, target 2. The pink lines all represent places the stock has gone down to and bounced. This pink line is referencing this last pivot low. So as you're selling down into it, it may bounce again. If you get below it, then it becomes resistance. And that's all these lines mean. I just want you to know what they mean going forward. Thanks for watching the video. Let's get started.